Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. One of the things we pride ourselves in is the content that we produce for our subscribers, for our premium subscribers, for our newsletter subscribers. We have one out today that focuses on the changes that we made to our S&Ds going into the 2025 crop year, particularly for canola and peas, and we continue to tinker with the other ones as well. This is a really great report that lays out what we think are the impacts of the Chinese tariffs are on the Canadian S&D going forward. We talk about the new crush regime that's coming into Canada and how many tons are being added to our crush capacity here in Canada and how that may change the landscape or continue to change the landscape. So you're going to want to be subscribed to that. In order to get subscribed to that, go to CanadianAgMarkets.com/subscribe. Hit that little blue subscribe here button. It's only 99 bucks a month and you get all of our analysis, including that weekly report. So if you do sign up, before the end of next week, I will send you this the canola report that we put out, or the canola MP report that we put out today. All right, let's get into what happened in markets today. It was a relatively good day, green day on the markets. We saw double-digit gains in canola today, $14.20 up to 663.30. We saw Minneapolis wheat up a penny at 5.89. Kansas wheat was actually up almost 3 cents, 2 3/4 at 5.22 and a half. Chicago wheat up a cent and a half at 5.29. We saw some follow through from the bullish pattern yesterday. Soybeans were up 20 cents at 10.36. Corn up 7 3/4 at 4.0350. Bean oil up a big 2.42 to 51.44 a pound. The Canadian dollar settled at 71.88, so we're down below 72. We continue to be down below 72. A little bit of losses in the cattle market today, down 13 points in the live cattle at 230.470, and feeder cattle down just 8 points at 358.30. All right, let's get into the major market movers today. I'm going to start with soybean oil. It saw some excellent gains today, about $2.40, as we mentioned, which is almost 5%. So this is the largest gainer, at least of the majors, that we saw on the board today. We saw it clear the 20-day moving average and the 50-day moving average. Those two averages converged today, and soybean oil hit right up against those at the close. So we'll have to see if we get some follow through on that as we move into tomorrow's session, but it was a positive day today for bean oil. Why that was because there was some news around biofuel waivers. It's not the only thing. There was also some good news on the export front, but we'll get into that in a second. Today, President Donald Trump's administration they announced they were expecting to rule on a growing backlog of requests from small refineries seeking relief from the biofuel laws as early as Friday. But Trump will delay that decision on whether large refiners must compensate on boosting their own biofuel blending. The U.S. Environmental Protection Agency, or EPA, will announce decisions on some of the 195 pending small refinery exemptions that date back. Some of them date back to 2016. The rulings will not be a sweeping win for small refiners, which is why I think that it rallied the soybean oil markets today. It will include some partial denials of waivers, according to one of the sources. The administration is also expected to issue a supplemental rule as early as next week to seek public comment on whether the large refiners should make up for the exemption or the exempted gallons in a process known as reallocation. So essentially what the administration is looking to do is potentially give the small refiners a break, but add that biofuel blending policy to the large refiners, which continues to kind of hold that biofuel market up. And I think that's why we saw some of that trade today in the biofuel market. That, of course, rallied canola really nicely today. Again, that was over 14 bucks, or just over 2%, or around 2% today on the November canola. That brings us right back to that previous resistance level, right about 665. So a month or so ago in these commentaries, we talked about how 665 was an important key support level. When it broke down below that, it did sink below that substantially. It's now rallied back to that level. That may be acting as some pretty strong resistance now. We'll have to see if canola can follow through on that tomorrow. Or into the end of the week here. Beans also got a really nice shot in the arm, as we were talking about it. Up 20 cents today. It did clear that 1050 mark, closed at 1056. We are now on the road to 1075. That's probably the area where we see the next level of resistance. That's actually back up here near those previous highs. We There is a small bit of resistance here at about the 1060 mark. But that was more of a candle trade than the close, so it's hard to tell how influential that'll be. But there's definitely a road now to 1075, which is a high that this market has reached a few times this calendar year thus far. So if you do have some target prices in mind, or you need to market some, putting some target prices that would result in a hit if we did move up to that 1070, 1075, or maybe even above 1065, might be a good place to get some target pricing in. All right, let's look at corn here today. Corn did rally as well, above the 20-day moving average. Still hasn't kind of broken that downward trend line yet, but today was a good day for export reports from the USDA. The USDA said that corn shipments totaled 2.8 million tons this week, or the week that ended August 14th, so into the middle of the month. That is double the amount from a year earlier, and significantly exceeded the most optimistic analyst forecast and sales. This also included soybeans, which soybeans actually reached 1.1 million tons as well, also beating the highest estimate. So, you know, the row crops got a boost today because of the export pace in the release from the USDA today. Um, Pro Farmer concluded today, embarked on the last day of the tour, ending in Minnesota. Um, the general the general feel I get from this is that the scouts are going to release numbers that are significantly lower than the USDA. Now, this isn't necessarily abnormal. The pro farmer is usually lower than the USDA. I think what traders will be looking for is the degree or the deviation from which they are away from the USDA, and comparing that to other years. So if we do see a significantly lower yield estimate and pod count from pro farmer than what we usually do as a standard deviation from the USDA results, then we could see a rally as a result of this today. I did have a feeling, of course, that Pro Farmer would come in lower. They are going into the fields a little bit more aggressively than, say, the USDA would, particularly because the USDA is trying to estimate a national number as opposed to looking at the fields one on one sort of thing. Um, so that's the skinny of that. I think that yields will come in lower. I think the important part of that question is how much lower do they come in, and whether or not that rallies markets. As we have seen some rallying in the corn markets as this crop tour has been going on. So tomorrow might be a little bit of a buy the rumor, sell the fact kind of thing. So some to watch out for, particularly on a Friday as we end the week here. Here's December Chicago wheat. We did see a little bit of follow through on that engulfing candle that we saw yesterday. We talked about in yesterday's video. It did trade right up into the 20-day moving average. So we'd like to see that. We'd like to see it break through that in order to get a little bit more optimistic on this. Spring wheat is in a similar boat. It tested the 20-day moving average again. We didn't see any crazy trade like we did yesterday in this market. So there might have been a few fat fingers that bought some really high, or at least high compared to the last couple of days of trade wheat contracts. So, still some follow through from that same technical signal that we saw in the spring wheat, but not enough to declare an overly positive outlook in the next short term. All right, that's all we have for you today. Thank you for joining us. We will see you again next week. No video tomorrow, but we will start again on Monday. Have a great weekend.